Okay, so like imagine, right, you're this business owner. Maybe you make, I don't know, awesome handcrafted furniture.
Okay.
You're killing it. Orders are coming in left and right. But you're always like waiting on those payments to actually land in your account.
Oh,
It's a
yeah.
total drag,
Yeah.
right?
Yes.
So that's actually what we're diving deep into today.
All right.
We're talking about accounts receivable factoring.
Hmm.
Basically, think of it like this. You're turning all those unpaid invoices into, well, cash, like right now.
Yeah.
And we're going to really unpack how huge this can be, especially if you're making, consumer products.
Right. Like our furniture maker.
Exactly. We'll look at all the benefits, cash flow, obviously,
Yeah.
but also how this is a whole different ball game compared to like going for a bank loan.
Right. Right.
We'll also talk about, what happens if a customer still doesn't pay up even after the factoring, because that's got to be a worry, right?
Yeah, for sure.
And then we'll get into like how this can help your business really scale up, and even like free up your time so you can actually, focus on making great products.
Exactly. Yeah.
So, I guess first things first, we should probably make sure we're all on the same page about what this whole factoring thing actually is.
Definitely. So basically, that gap between when you have to spend money to make your product and then when you actually get paid for it.
Yeah.
Factoring really tackles that head on. Like, take our furniture maker. They've already paid for wood, tools, maybe even hired extra help.
Right. All up front.
Exactly. But then those retailers, they might take forever to pay their invoices, like 60, 90, even 120 days sometimes.
It's like the worst kind of waiting game.
Totally. And that's where factoring comes in. You have this factoring company, and they'll basically buy those invoices from you, the manufacturer, at a bit of a discount.
Okay.
But the important thing is you get most of that money right away. You don't have to wait and play the waiting game anymore.
So it's like a cash advance, but instead of your credit card, it's your invoices.
You got it.
That's actually really clever.
Yeah.
But okay. Wouldn't a regular bank loan do the same thing? I mean, why not just go that route?
Well, think about it. Those traditional loans, they usually have a ton of requirements. Good credit history, you need collateral, and don't even get me started on all the paperwork.
Ugh, yeah. The paperwork is the worst.
It's a whole thing. But factoring, it works differently.
So it's not just looking at my business's finances.
Right. It's more about your customers and how reliable they are. So, like, say our furniture maker is selling to a huge, national chain store, one with awesome credit.
Okay.
That makes those invoices way more appealing to a factoring company, even if the furniture business is still pretty new.
So it's like they're banking on the big retailer to pay up, not on the smaller business.
Interesting. But hold on, what if, even with all that, a customer just doesn't pay? Like, what happens then? That's the million-dollar question, right? But that's why factoring companies are so good at what they do. They know how to assess risk. They look at the customer's payment history, credit score, the whole 9 yards.
They're not just handing out cash willy-nilly.
Nope. Plus, there's this thing called non-recourse factoring. It's like extra security, almost like insurance.
Okay.
So in that scenario, if that big retailer, for whatever reason, doesn't pay their invoice, the factoring company takes the hit, not the furniture maker.
Huh. That's a pretty sweet deal. All right, so we've got instant cash, we've dodged the bank loan maze, and we've got some protection if things go south. What else makes this a winner, especially for someone like, building their business?
Well, imagine our furniture maker suddenly gets this, massive order. Let's say it's for a whole hotel chain. That's amazing. But do they have enough cash on hand to handle that?
Probably not. They'd need to buy way more wood, hire more people.
Exactly. And that's where factoring really shines. You see, bank loans usually have those fixed limits, but factoring, it scales with your business. More sales, more invoices. That means more potential funding. It's totally flexible.
So it grows as you grow.
Exactly. And think about all the time and energy this frees up. No more chasing down late payments, no more juggling invoices. The factoring company usually handles all that.
It's like outsourcing your accounting stress.
You could say that.
I was just thinking, earlier you mentioned how factoring relies on the customer's good credit, right?
Yeah.
But doesn't that make the manufacturer's own relationships with their suppliers, even more crucial?
Absolutely. It's all connected. When you've got steady cash flow, thanks to factoring, you can pay your suppliers on time, maybe even early.
Oh, yeah.
And that builds trust, Might even get you some better deals down the line.
It's like you're proving you're reliable, so they're more likely to work with you.
Exactly.
Okay, so big picture. It sounds like accounts receivable factoring can be a total game changer, especially for businesses that are making products, growing fast, that kind of thing.
It definitely gives them a leg up.
Here's something I was thinking about, though. This whole system really highlights how everything's connected in business, right? I mean, your customer's financial health has a direct impact on what you can do. So it makes you wonder, are your customers in a strong financial position? Something to think about.
Yeah, for sure.